Hello, everyone, and welcome to Lytham Partners 2024 Investor Select Conference. My name is Ben Shamsian, Vice President at Lytham Partners. Before we begin with our keynote presentation entitled Trends in the Micro and Small Cap Financing Market, for those not familiar with Lytham Partners, it is one of the country's leading investor relations firm. With more than 2 decades of corporate access experience, we've built one of the industry's most diverse and effective platform for connecting small cap companies with high quality and focused institutional investors, while creating a framework of best practices in all aspects of investor relations. Today's presentation is hopefully yet another example of where we could bring value to multiple constituents. And now for our keynote presentation entitled Trends in Micro and Small Cap Financing Market, we welcome Mr. Joseph Lucosky. Mr. Lucosky is the managing partner of Lucosky Brookman LLP. He's a distinguished legal and financial professional. Joe's extremely passionate about strategically leading the rapid and efficient advancement of micro and small cap companies, CEOs, and organizations, taking them to new heights. With unparalleled experience in navigating the intricate landscape of financial markets, Joe is renowned for his proficiency in facilitating transactions from quotation platforms like the OTC markets to senior exchanges like NASDAQ, NYSE, and CBOE. He's a trusted authority in uplisting, cross-listing, IPOs, reverse mergers, SPACs, and secondary offerings, offering valuable guidance to clients seeking to expand their market presence and increase the value for shareholders. His firm, Lucosky Brookman, is a corporate and securities law firm directly serving the microcap and small cap markets, specializing in sophisticated corporate and capital markets transactions, mergers and acquisitions, secured and unsecured lending deals, and commercial securities litigation. Its offices are located in New York, New Jersey, and Philadelphia. The firm was established 12 years ago out of a desire to dedicate more time and effort to directly serve the select clientele in the small and middle markets. Lucosky Brookman is the industry leader in microcap IPOs and in uplisting domestic or foreign quoted OTC companies and foreign exchange listed companies to the NASDAQ, NYSE, and the CBOE. Joe will be referencing some very insightful data with us this morning. These materials can also be found on pages 7 to 9 on our conference packet, which can be found on the conference website at lythampartners.com/select2024. And now, without further ado, I would like to welcome Joe Lucosky. Good morning.
Thank you, Ben. Thank you for having us. It's a pleasure to be here, and we appreciate being able to address the conference live and share some of our insights, data, analysis, and just trends in the micro and small cap space.
All right. I believe Lucosky Brookman is the only law firm in the country, probably in the world, that tracks all uplists, cross-lists, IPOs in the microcap space. Can you tell us a bit more about your data-driven approach and the value it brings to your clients?
Sure. And thank you for asking this question, because I think it's really one of the things that separates us in the industry and separates us from other service professionals. You know, years ago, we were having a hard time finding and sorting and segregating microcap data. Because if you look at all the data feeds from the exchanges, they really just track all deals. And more particularly, they track bigger deals, more high-profile deals. So there is a need in the microcap to really, for somebody to track these deals on a daily, quarterly, monthly, yearly basis, and really try to figure out what's going on. Because a lot of times, the broader markets don't tell the full story. Things take time to trickle down or tighten up or open up in the microcap world. So we decided years ago to start tracking every single microcap, which means a deal that is sub $300 million market cap on day one and below, every initial public offering, every domestic uplist, and every foreign cross list, and finding those deals, tracking them, analyzing them, curating them, finding the right data points to try to make better decisions in the marketplace. And I'll tell you, it's been completely well received, because investment bankers, consultants, others in the industry come to us for our data, not just our data, but our analysis. And it helps us really give our clients the best information available to make better decisions when they're interacting on a transaction. And the good news is that because of this data, we're able to see what is going on in the marketplace, what has occurred in the past, and more importantly, what trends are going in the future. And we distribute this data as a free service to everybody. In fact, I see a lot of service professionals, even some others copying our data and using it, which is great because in addition to the data, you know, we do consider ourselves ambassadors to the industry. But our data-driven approach is very unique, and we're very proud of it to not just serve our clients, but serve the industry.
Yeah, that's absolutely, we've looked at it as well here at Lytham Partners to kind of see the world and sort of help our clients understand what's going on. When you reviewed that data, what are some of the interesting trends you're seeing on current deal flow with regards to amounts and the types of deals in the IPO and the uplisting markets? Is there an undercurrent of sorts that you're seeing here?
Sure. Well, 2023 can really be summed up in 3 words: defying the odds. Because especially for microcap IPOs, if you asked anybody in the first quarter, second quarter, even the third quarter of 2023, they would tell you the microcap IPO market was depressed. And we even believe that to a certain extent. But as we started to uncover and look for and curate the data of the microcap IPO, we actually found just the opposite, which is so interesting. We found that in 2023, there were 87 microcap IPO deals completed versus 71 in 2022, a 24% increase in number of deals. When you speak to the amount of capital raised in those IPOs, 1.25 billion occurred in 2023, only about 9% off from 2022. So if you look at just the number of deals, you would think the IPO market for microcaps is doing amazing. But that doesn't tell the entire story. That is why our data, our analytics is so important. So when you really dig into those numbers, while the number of deals was up, and it was up 24%, even though it didn't feel like that in the market, because deal sizes were down. So for example, in 2023, the average deal size was just under $8 million for the microcap IPO market versus just over 15 million in 2022. And similarly, which goes along with that, average deal prices were from the mid 6s in 2022 down to the mid 5s in 2023. So right now we're seeing data that tells us the sweet spot for a microcap IPO is somewhere between $4 and $8 million. And we could talk a little bit, hopefully later, about how to get to the remainder of that free float, which is $15 million requirement. But for now, that's the sweet spot we're seeing. Larger deals become very difficult. Smaller deals are obviously preferred. We've been saying for many months now, less is more. That's what the market's telling us. The other interesting thing we found in 2023, that more than half of the microcap IPO deals were done by foreign companies. 45 out of 87 deals were done by foreign issuers, not domestic, which again is a great, amazing stat because it was up 45% increase on foreign filers from 2022 to 2023. So what we've taken away from that is the senior exchanges in the United States is really an attractive destination for foreign companies. One other thing I want to just mention, really 2 other things, but one important data trend that we've seen is because deal sizes are lower between $4 and $8 million, and every company has to get to 15 of a public float in order to qualify. We've seen this trend come on in 2023, where most companies are using selling shareholders as a mechanism to meet that $15 million threshold. So if a deal is 8 million, you need 7 million of selling shareholders in order to meet the minimum qualifications from NASDAQ. And that's fascinating because in 2021 and 2022, banks and issuers alike wouldn't let a selling shareholder into the deal. Nobody wanted to talk to selling shareholders. Now selling shareholders are the most important part in some instances of the transaction. One other major interesting thing that we found, unlike 2021 and part of 2022, warrant coverage in IPOs has all but disappeared. Out of the 87 deals, only 4 deals had warrant coverage, which again is just an amazing statistic when you look at the underlying data. The last thing I'll say about the uplist and crosslist market is 2023 was not kind to that market. A lot of things were going on, but namely NASDAQ not allowing a simultaneous reverse split with opening day of trading and making companies trade 5 to 10 days prior to listing has all but killed off the uplisting market, at least in our opinion, and from all the people we speak to in the industry. But as you can see, you have to dig into the underlying data. You can't just go based on experience or the news or publications. And when you do, you find these interesting trends that otherwise wouldn't be noticed.
That's fascinating, some of those nuances. And then similarly, when you look at the secondary and the follow-on markets, what are the trends there in terms of what you're seeing?
Yeah, I mean, look, the secondary market in 2023 was very active. I'm sure it wasn't, didn't feel as good, but it was definitely very active. I mean, by our data, again, microcap companies exchange listed, there were almost 500 private and registered offerings done, combining for almost $5 billion of secondary capital into the microcap markets. That's a massive statistic in its own right. But one of the things that we found was that in addition to pipes and private placements and registered directs, ATMs and equity lines have become a little bit more popular, as the market had become more challenged in 2023 and tightened. Now, ATMs are great if you qualify and can do them. Certainly, equity lines have their own issues, but can be a very, very useful tool for companies, both on the OTC and on exchange, on the senior exchanges. One quick statistic I want to just point out, because I think it's just fascinating, is that the average deal size for private placements, pipes, registered directs really hovered in the $4 to $4.5 million range, which was slightly lower than years past. Obviously, given when the markets are tighter and they're more challenged, deal sizes are smaller. But across the board, we noticed whether it was a pipe, a private placement, or a registered direct, the average offering price was also lower. And it hovered somewhere around $1.60 to $1.75 as an average offering price. And that really makes sense because in a challenged market or a challenged economy, or when things aren't working, obviously the prices, stock prices of some of these microcap companies had come down. So valuations are down, secondary prices are down, just like primary markets in the IPO and uplist. So everything seems to be moving in a similar direction. And we're hopeful for 2024, especially coming off the first quarter into the second quarter. We think things will open up a little bit and you'll see a slight uptick in dollar size of deals and pricing of those deals.
Got it. And that's great. I want to talk about some of the challenges you're seeing. What are the main challenges from your standpoint, not only as an attorney, but also as an entrepreneur for the small and microcap issuers? And what can issuers do to have an impact when raising money in this market? Sure.
Well, coming off 2023, where it felt like nothing was easy, we've learned a lot of lessons, both, as a law firm, as an ambassador to the community, and just in the industry in general. But the main thing that we're seeing, and the main challenges we're seeing, is that deal valuations are still pretty depressed, which means that if you're going to raise money, either in a secondary format or a primary format, there's going to be slightly more dilution. So I think members of management and boards of directors and, all the groups that we advise, entrepreneurs, really have to think critically about whether it's the right time to raise capital. It's always the balancing act between, hey, we're going to have a slightly lower valuation, but, we can use this capital for some, extraordinary growth. And that's the question that we see all the time. Is it better to take money now at slightly lower valuations, put that money to good work to further grow the company and build shareholder value? So deal valuations are low, deal sizes are lower, deal prices are lower. And it really makes management, boards of directors, and other advisors think critically about what they're going to do with those proceeds. It's a super important analysis that I think more companies need to do instead of just taking money and then on what terms they're going to take money. The lessons of 2022 into 2023 and still in the first quarter of 2024 is less is more. And we're seeing that across all metrics. There's also some challenges with the regulators. While the SEC has been a lot more agreeable now that I think the markets have slowed a bit and they've been putting out registration statements quicker, and they do a great job. We have seen some bottlenecks with NASDAQ, not so much with New York Stock Exchange, but certainly with NASDAQ, and the challenges of some new rules, concentration and distribution analysis, and just the whole process of getting through NASDAQ and the back and forth of getting a deal cleared has become a real challenge for companies, investment bankers, and service professionals. But again, we're hopeful for 2024. We see some things opening up. We see some, light at the end of the tunnel.
Yeah, no, let's hope for that. Joe, we've known each other for a while now. Both you as an individual and Lucosky Brookman as an organization. We view you guys certainly as ambassadors to this industry. What can we do as a community, as ambassadors, to help advance the micro and small cap ecosystem and community in light of these markets and challenges?
Yeah, that's a great question, Ben, and it's one I think about all the time. At Lucosky Brookman, we want to be good lawyers and we want to do good deals. We want to do good deals with the right people and the right companies. But also, we think about, we speak about, we write about often, a lot of times, the industry itself. And we care about the industry because at the end of the day, this isn't do a bad deal. Nobody wants to, it's not us against the regulators. It's not us against NASDAQ. I believe we should all be working together for the betterment of the community and the industry. And I really think that, the OTC markets, NASDAQ, New York Stock Exchange, CBOE, the SEC, all the professionals need to really come together in the community to advance the causes of the microcap community, the pure entrepreneurial spirit, the growth-oriented companies. Because right now, it's very disjointed. NASDAQ is off doing their things, telling the community that, hey, the SEC is making us do this. The SEC, rightfully so, they're the 800-pound gorilla. They form their rules and regulations, how they do it. And, there hasn't really been much out in the microcap in a long time, aside from sort of the SPAC world, which impacts us. OTC has been getting more aggressive about protecting their turf. And I just think that everybody, all of these organizations across platforms, service professionals, accountants, lawyers, bankers, really need to work together and stop viewing this industry as me against you or us against them or NASDAQ against, the deal. It really, everyone should be pulling in the right direction for the betterment of the community and just the betterment of, getting deals done, good deals done, shareholder value, and having everybody rise up together. And we want to be at the forefront of that cause. We really do believe that there's enough work and enough business for everybody. And we want to try to find impact in the ways that we can, whether that's new rules, new thought leadership, writing articles about things that impact our world. It needs to be a kinder, gentler, more collaborative community, in my view.
No, I certainly agree with that. I think in general, when there are good deals that get done the proper way and shareholders are getting it right by management, it helps the entire ecosystem, including us and you and all the players that are involved. So certainly agree with you on that. Joe, I want to talk about the current development in the micro cap, small cap space. Obviously, we know the capital markets are very dynamic. The regulatory landscape of the micro cap and small cap space is ever evolving. Going into 2024, what are some of the main developments you believe will continue to have an effect on the markets?
Yeah. Well, we're seeing a lot, and 2023 has taught us some valuable lessons. I'll say first and foremost, what comes to mind is the SPAC market, because the SPAC market, well, the microcap world has always been in part of the SPAC market. Over the last 2 years, it has really become an important part of the SPAC market where, you know, there's so many SPACs out there with a lot of supply. They have tried to really come into the private microcap company world and the OTC listed microcap company world to try to put deals together. And one of the things we've seen over 2022 and 2023 is that the SPAC market has been challenged. Trust proceeds have been all but evaporated. There's been tighter regulations coming out every 6 or so months from the SEC. There's been some new announcements this week on some new rules and regulations. So the SPAC market is certainly, we're hopeful that it's going to continue to be robust, but deals are very challenged because of regulations and otherwise. The other thing, that big announcement that from 2023 that we think is going to have an impact on the uplist and crosslist market, especially, is CBOE now, CBOE being approved to be a higher exchange, a senior exchange, really to compete in a sense with New York Stock Exchange and NASDAQ. They put some qualification rules in effect that we believe are interpreted in a much more user-friendly way, especially when it comes to NASDAQ. But again, NASDAQ, the 800-pound gorilla. I just saw a statistic the other day. They do 83 or 86% of all IPOs. I'm not sure they care much about being user-friendly or some of these issues facing certainly the microcap, but CBOE is certainly going to challenge that marketplace, especially in the uplist and crosslist market. The other thing that's a super fascinating dynamic, and one that we really haven't gotten involved in, but are trying to sort of be good ambassadors to everybody, is OTC has really become aggressive lately and really trying to protect their turf a little bit more than they have in the past. And, recently they've been pointing out that, certain companies maybe shouldn't have gone public, or certain deal prices have been depressed, or stock prices are trading low. I'm not sure they have the solution or put forth a solution, but they're certainly, really taking shots at NASDAQ and the New York Stock Exchange and others in the industry to kind of, protect their OTC turf. And again, this is a perfect example where I think it's great for all of us to work together and come together as a community to figure out, what makes sense, and maybe not set some guidelines, but at least have some ground rules to all agree, what makes sense. The other thing that we're seeing is there's a real strong demand from foreign companies again. On the LPO side, we've seen lots of deals in Asia. China is very active, but even more than that, we've seen deals from Singapore, Indonesia, now Japan, really coming online. There's a little bit of a contingent coming out of Italy. We're seeing the Nordic countries. So there's definitely a undercurrent that foreign companies are certainly very actively looking at the U.S. capital markets, even now in 2024.
Yeah, just on the foreign companies, we've seen that a lot as well. I mean, I can add, countries like India to that mix. Why do you think look, the U.S. has always been a good place for capital markets and many coming into it, but why do you think recently has been a lot, the attraction has been more?
Mm-hmm. Well, I think foreign deals have done well. Some of the best deals in the marketplace have been, foreign listed companies. They tend to be, in the data we're seeing, a little bit more mature than domestic U.S. companies. They seem to get a better response in the markets, not just out of China, other areas as well. And I think, they still want to get the exposure and disclosure of the U.S. capital markets. And when things work, bankers, deal people, consultants, you go where the money is. And I think that there's been a big push to introduce these foreign companies to the U.S. capital markets when the domestic side isn't working. And because some of them have done really well, they're continuing to make a push in that area.
Right. Yep. We do have a number of issuers attending our conference today who are listed on the OTCQX International. What is your view on whether or not OTC listed issuers should remain on this platform or instead seek to list on a major U.S. exchange?
Yeah, that's a loaded question. That's a great question. That is an industry question that has been really debated lately, especially with OTC now really protecting its turf and starting to, throw punches at NASDAQ and New York Stock Exchange and others in the industry. Again, I don't know that OTC has announced a great solution for these companies, but they certainly have made their point very clear how they feel about companies uplisting. My view is this, we try to evaluate each deal on its own merits. And again, we're not management, we're not boards of directors, we're not investment bankers. We're lawyers. Now, we tend to do more than most lawyers. We're very proactive. We try to add value at every point in the process. At heart, we're entrepreneurs, so we really understand the game. But at the end of the day, it's not our decision. It's management's decision. It's the shareholders' decision. It's the banker's decision. It's the consultant's decision. It's certainly not the lawyer's decision. But my view is that, if a company can stay on the OTC, and I say that, very generally, can stay, meaning that they can achieve their goals of liquidity, achieve their goals of raising capital, achieve their goals of growth, then I don't think there's a rush to get up to a higher exchange. I do think, though, when companies are unable to raise money, don't have the right liquidity, don't have the right things going for them, whether they're private or on the OTC or on a foreign platform, then it's natural to look for other options. And I think that's what's occurring. I think there's a little bit of a misplaced anger here in the industry on bankers and consultants and management teams and directors. I truly believe that most management teams, the overwhelming majority of them, are looking to grow their company. It's their life's work. It's their passion. It's what they do all day. It's the time they take away from their family and loved ones. They're not just raising money to line their own pockets, again, in most circumstances. So I think companies are going to go where the capital goes. And if there's capital available on the OTC or a foreign platform, wonderful. I think they should then think very critically about what the next steps are, what the next few years will look like, and how they can grow the company and build shareholder value. But if there is no liquidity and there is no capital, then I think you have to really explore other options. Now, whether that's a NASDAQ listing, New York Stock Exchange, CBOE, or just staying private and getting a friends and family round or some other private deal done. But I really think it depends on the business, the growth, and the metrics that management puts out. And you got to think critically about these questions. And we help companies do this all the time. In fact, Ben, we put together what we call a listing analysis for all of our clients at the beginning of the process. We don't even charge for it. That's how passionate we are about finding the right companies to list and raise capital. So we do this as a courtesy. It takes us, 5, 6, 7 hours, but at least the companies now have a roadmap to see, hey, this is how long it's going to take. This is where we stand on the qualifications. These are the risk factors. This is what we should look at. This is what we should ignore. And, it's a very dynamic and all-inclusive process.
Got it. I want to talk a bit about the CBOE global markets. You've mentioned it a few times. Can you tell us a little bit more about the third major exchange here? How does it compare to the other exchanges? And in sort of where do you see that going in the near term and sort of in the longer term?
Sure. To me, this has been the major development in the microcap world of 2023. Now, while CBOE is definitely on the right track and they're making a lot of traction and they're blanketing the microcap space with goodwill and just getting their name out, they have completed a few deals, so it still remains to be seen if traction will take off on the exchange, but we're very hopeful. We think competition is good. We think that having a more friendly, higher exchange, and I say more friendly because that's how they're positioning themselves, meaning they seem to have very similar listing qualifications to NASDAQ and the New York Stock Exchange, but how those listing qualifications are interpreted and what is allowed regarding exceptions and carve-outs seems to be a lot more user-friendly. Also, the process working with CBOE seems to be much smoother, less awkward, much more friendly. But again, they're the new kid on the block. The question really will be, will the money follow to CBOE? And if they can get a couple good deals under their belt here early in the year, and the capital is satisfied and the money follows, I think they're going to make a huge impact in not just the IPO market, but certainly uplist and cross-list market, because those rules seem to be much more inclusive and friendly and streamlined than what NASDAQ is currently doing. And there's a lot of sort of data we put out on this when comparing. In fact, we're putting out an article here with Forbes here shortly on the differences between CBOE and mainly NASDAQ and how the rules are interpreted and how they appear to be at least much more user-friendly right now. But it remains to be seen. I think the whole industry is abuzz with CBOE. We'll see if the money follows and see what they put together. But we are very optimistic. We like the group so far at CBOE, and we think they're doing a phenomenal job in adding some diversity and some competition to a very important market.
All right. Want to talk about the NASDAQ a little bit. What are your feelings about the NASDAQ these days? We hear things that have tightened, and we hear it from sort of the banking side of the world, as well as from our companies themselves. Give us your thoughts and how you're seeing this evolve.
Yeah. Wow, you really put me on hot seat today, Ben.
It's not easy, Joe.
I'll tell you, I get this question every day of my life. I wake up with this question. I go to bed with this question. My phone rings off the hook with this question about NASDAQ because, getting a deal cleared in NASDAQ has changed so dramatically since the NASDAQ pause of, roughly September-ish, October 2022, and then the new concentration and distribution rules. I just want to say at the forefront, we love NASDAQ. We really do. We want NASDAQ to be the best, along with New York Stock Exchange and CBOE, meaning that we do good deals, they're compliant, things work the way they're supposed to. But that being said, it has become much more challenging working with NASDAQ and this, sort of awkward back and forth that occurs now in trying to get a deal done, really without explanation, without rhyme or reason. The whole industry is abuzz about this. And it's not just us. I mean, I had this conversation, like I said, sometimes 3-4 times a day. Every conference we go to, this is the question. Every lawyer we speak to wants to know why NASDAQ is doing what they're doing. There really has been no clarity from the exchange as to why they're putting all of these extra steps in place and really eviscerating the capital markets for the microcap for the last 50 years. They all functioned a certain way. There were no issues. Or very little issues. Things happen from time to time. All of a sudden, since October 2022, that whole process has turned itself on its head. It's become more difficult to get deals through, more lead time. And the capital markets don't generally work like that. Things have to move quickly. So again, we are in communication with NASDAQ, almost every single day, somebody from our office. We try to, lightly push and figure out and give advice. And again, as an ambassador to the community, give our thoughts. Whether they take them or not is a different thing, but we're constantly thinking about this. I think that, NASDAQ is doing what they think is best, and it's important that we support them, but keeping in mind that capital markets have to move forward. And that's why we've been receiving a lot more engagements now as NASDAQ special counsel, trying to help, push deals through in a way that is helpful to the exchange and also not prohibitive for companies or shareholders in getting things done, because it's a very, very hard world right now for investment bankers getting through NASDAQ. And we like to try to do our part, as small as it is, for the community and the industry to, make things a little bit easier.
That's great, Joe. Thanks for your time here. We're hitting our time limit. Just want to let the audience know, the data Joe alluded to is in our conference packet on our website, on the conference website. You can also find it on the Lucosky Brookman's website, as well as articles that Joe alluded to, which are all insightful. With that, Joe, thanks for your time, for your insight. We look forward to having you more at our upcoming events. And everyone, thank you for your time and enjoy the rest of the day. Thanks, everybody.